Top of the morning, top of the morning. Back at it again with another one. And today we're looking at the Nasdaq. We're going to start off on the daily chart. We're going to be looking at the price movement of yesterday's candle. That's the Tuesday candle. And we'll just ignore the Wednesday candle for now. But without further ado, as I was saying yesterday, I got to my charts. I noted the two closest PD arrays or imbalances from where price was. I had the sell side imbalance just above where price was, and that buy side imbalance that was below where price was. As a procedure for me, my trades, or what I prefer to look at, is 1 day and 4-hour PD arrays. So I mark out the previous day's low. I'll wait for price to sweep the previous day's low. That'll give me my bias. And then I'll look for signs or proof that price is likely to expand to the upside if I have a draw to the upside as well. My draw yesterday was the previous day's high or a double top, as you'll see as we go down to the lower time frame. It was also laid with this, so I had those three PD arrays: the double top on the 4-hour, the daily high or the previous day's high, and that daily SIBI. That was my draws on liquidity to the upside. That was also further hinted or informed after I noticed that price took down this double low here on the daily time frame and also tapped into this buy side imbalance, as well as since price has been pretty bullish over the past couple of weeks. Once I saw price run, even though it was a bit of a shallow run, as you can see, a bit of a shallow run. Once I saw price run below the previous day's low, I switched and I was like, okay, then we're bullish. This occurred round about, let's just go to the 4-hourly time frame. That run down below, like I said, pretty shallow run, nothing crazy really. Essentially, we printed a double bottom. I wouldn't be surprised if price would come back to tap below this, but we'll see. This was around 2 a.m. on the 4-hourly time frame. And yeah, when I got to my charts, we were somewhere around here, approaching that 4-hourly sell side imbalance. So I was faced with two potential outcomes for the trade. Either we get to that imbalance there and price gives me signals of bearishness, and then I'll look to enter short and take profits there, or that PD array will invert. By invert, I mean price will go through and close above it, and then I'll look for signatures or an opportunity to go long, or like wait for price to tap in here for me to buy, so I can take profits ultimately at this double top here, which also lines up with the previous day's high. So now that I was like, okay, cool, I have my bearings. I didn't participate in London. I let London pass through. London took the lows of the Asian session, and then New York came about, and then I looked to position myself there. Let's go down to the 1 hour just to take a look at it. As you can see, this was around about 9ish here. This is when the New York session started. So market opened, we had a manipulation to the downside. We tapped into this 1 hourly fair value gap, which lines up with the order block here that formed after taking liquidity. So you can see here, this low here, we have liquidity there that got taken by price manipulating down low at 3 a.m. If you can low-key look at it, this is pretty much an ICT classic buy day template where we have the open. What's wrong about there? We have the open. Let me just like sketch it out. Had the open, printed out the low at around 3 a.m., the daily low in London session. Shot up, printed the high, came up, and then closed somewhere like there. So that was the profile for the day. Market open in New York, tapped into that imbalance there. Price shot up, closed through and through that 4-hourly imbalance. That inverted and gave us an opportunity to buy. Another thing of note is that this 4-hour fair value gap, we also have it on the hourly. Do you notice that separation in candles here? There's a gap here on the hourly that overlaps with the 4-hourly time frame as well. If you go down to the 5-minute, you can see we also have that as well. Pretty random. You can see here, run about half past 3 when market opened, price shot down, taking the liquidity below these relative equal lows. This also lined up with that hourly fair value gap that we just looked at, if you remember. Once we hit that, price shot up, closed through that 4-hourly inversion fair value gap, or that 4-hourly gap there, and then ultimately came back down at 10.15, tapped it again at 10.50, and then we shot up to this level here, came back down, took the liquidity below these relative equal lows, shot up again, and ultimately hit the target, or our ultimate projection target. So I know I said a lot. For someone who isn't accustomed to the channel or the videos, you probably don't understand what I just said, but let me break it down for you. Now you remember we have that previous day's low and previous day's high. You notice how that's a double top there. These areas, people who are buying the range or such, they would buy here. They would have their stop losses here when there'd be liquidity, or if they try to get breakout trades, they'd have their stops there. So then you know there's pending orders here. The opposite is true for this area over here. So if you're on the opposite side of the range, say you're at the bottom here, you buy, where would you want to sell to? You'd want to sell there, since you know, you can see visually there's a double top there. So people have orders for you to pay your trade with. So you buy somewhere here, you'd sell there. You'd sell maybe in this area and you'd get it off there. You know? Same principle applies. So now, with that context, think of that similarly to here. When you have this double bottom here, there's sell orders here. People who are buying will have their stop losses. If you bought and it comes here, you want to sell your position. If I know people are selling here, I'd want to buy, since I know there's a lot of liquidity. This also lines up with a fair value gap. So when price goes down here, that's a nice opportunity to buy, since there's a lot of these confluences happening. This price swing here to the downside, you can use that to project or to anchor a projection fib to give you an idea of where they take profits or where ultimately price could lead up to. This -2 to -2.5, that's one area where it reverses. -1 is another area if you're being conservative. If you entered somewhere there, so you entered here, you can take profits there or there or there. You can see very random how price went from over there, got the entry at 10 o'clock over there, and then we hit that level over there, that -2.5 to -2, hit that, went down, then came back up again. I personally like to enter, or I look to enter from 950 to like about 10. 950, or from 950, I wait for price to manipulate or to take liquidity or perhaps break structure. Then I look to enter from around 10. At 950, what happened is that price broke these short-term highs and changed the state of delivery. So once you got past this point here, price went from delivering bearishly to delivering bullishly. So you could see it changed. If I put this here, that's a straight line. You see how the candle closes here? Don't go past. Let me just put this there. These candle closures don't go past that. That's an order block, essentially. That double bottom again, took that liquidity, shot up. Later on in the afternoon is another time I like to enter. Between 3 and 4, we had this imbalance here with the order block. Price went up, came back down again, tapped it, and then we proceeded to move. Ultimately hitting our projection fib target. Another nice thing of note is that at 12 we got that reversal. Look into playing that 12 o'clock reversal. If a trade presents itself, then it presents itself. So we have obviously that AM direction during lunchtime. If it reaches to a significant point or PD array, look for a reversal of that AM direction. So you see in the morning yesterday we were bullish, lunchtime we were bearish, and then we continued through with the AM direction in the afternoon after we got back to a nice place of entry. Then in the afternoon, like last hour, looked to get a continuation trade, and the rest is history, man. Beautiful ICT classic buy day template playing out yesterday. Well, for me it's the first one that I was conscious for, or like I actually understood what was going on and I was able to anticipate price moves and etc. Just very nice. Very nice. Thank you all for watching. I appreciate you all. Be sure to check us out on Twitter. And if you want to see any specific content, be sure to let me know in the comments. Thank God for the skill.